What are the potential downfalls to a reverse mortgage? A lot has been written on that topic, and so in the essence of time, to keep this video succinct, I'm going to go to the number one downfall, or the most commonly conceived downfall of a reverse mortgage, and that is that you're losing the equity in the home. So when you have fees associated with a reverse mortgage, when you have interest associated with a reverse mortgage, when you have mortgage insurance associated with a reverse mortgage, all of those get added on to the loan balance of the loan, therefore decreasing the amount of equity that one has in the home. And so as you go farther and farther into that loan, you'd have less and less equity, and in many instances you may have no equity. You could have negative equity, meaning your balance could be greater than the value of the home. Now, keep in mind that the HECM reverse mortgage is a non-recourse loan, which means if at the time that the home is sold, that the balance on the reverse mortgage is greater than the home value, there is no repercussions to the owner. It is a collateral-based loan based on the home, and the estate is not at fault of any deficiency. Now, here's what I think is often misunderstood about reverse mortgages. As the equity is going down in the home, right, because the balance of the loan is going up, as the equity goes down, we have to think about, well, what happens to the rest of the estate or the individual's assets? Because assumably the money isn't being drawn out of the retirement accounts to pay the mortgage. We assume that you may be able to defer Social Security potentially until a later age so that you have greater benefit use. And if there's not money being paid to a forward mortgage payment, then that money is somewhere else in the estate. And that is the piece of the puzzle that I think is most commonly overlooked with a reverse mortgage. There's two sides to this fence. As the equity goes down in the home, then presumably the assets would go up somewhere else. The retirement accounts are buoyed, the draw on Social Security is delayed, there is less, you don't have to work as much potentially in those later years. So I think that when you analyze the pitfalls of a reverse mortgage, which is reduced equity, you also have to very carefully analyze what the upside is on the other side. Hey, there's a lot of issues to consider with a reverse mortgage. We hope that you get educated, and we've compiled as much information as humanly possible on our website, strategicreversemortgage.com. We hope that you'll take the time to really answer your questions there, dig deep, and then we'd love an opportunity to answer any additional questions that you have. Honored to have the opportunity to chat with you, and we invite you to reach out to us at your convenience by either email or phone. All right, thanks so much for listening. Hope you have a great day.